In today's video, I'm going to be having a look at the News Media Bargaining Code. I'm also going to be looking at Ferrari and a little bit on silver and maybe a silver lining. Hello and welcome to another acysecurities daily report video. My name is Alistair Schultz and I'm going to be your host for today's trading journey. Now, the first thing that I'm looking at today is what's gone on with Google and Facebook versus Australia and the new News Media Bargaining Code. Now, realistically, when I look at this code, it doesn't actually leave a lot in place for Google and Facebook. There's no attractiveness for them to actually take up this offer. And so naturally, we've already seen in the media, it's been brought a little bit more attention in the last few days because we've heard Facebook and Google both say that they would be more interested in actually leaving and pulling services from Australia than what they would actually do following suit and enacting on the code. Now, there's a couple of reasons for this. The first one is it opens up the door, or the gateway to hell, as I like to call it, for Facebook and Google. Other countries may want to try and do similar suited things. Now, exactly what is the problem when it comes to this new code? Effectively, it means that for every piece of content, link, article, or anything that is made to Australian media, Facebook and Google would have to pay to the copyright owners. So that becomes a pretty big door, and it means that if someone shares a link 2 or 3 times, then they're going to be paying per link. So that's problematic, not only from a revenue point of view, but also from just the budget side of things. If you are actually going to be doing it, we estimate the total revenue that really Google and Facebook make from Australia somewhere in the $10 million realm. Whereas when you actually look at what's being asked of some of the news media agencies here in Australia, they want $600 million to $1 billion on an annual return payment from them. So obviously it doesn't work out to be viably an option for Google and Facebook. Now, further to that, it asks for the algorithm in use that they do to actually mediate between different articles and give you some diversification of what media gets out there. Now, naturally, if you do get that out there and it gets shared, it's an IP right. It's a problem. That's definitely an issue for at least Google and Facebook, but no, also for maybe some of the smaller guys. If the media right company gets the ability to actually have a look at some of these algorithms, then it means that they can probably optimize how their articles get found, and eventually you end up with a page or a scroll feed on your Facebook or Google search terms that will end up with just one article entirely all the way through it, or perhaps just the articles from one entity. That's problematic. It means that it hurts small to medium enterprises. And so it's no wonder they're going to be a little bit of a problem, but think about how damaging it could be if Google and Facebook walk away. If they do that, how often do you pull your phone out and actually use Google Maps, look for a restaurant nearby that might be new, or even look at movie tickets or anything else in between? How often are you on Facebook or sending a message through WhatsApp? All of these things would be impacted very, very quickly. Even YouTube would pose a significant problem. So moving forward from this idea of how we're going to navigate this, personally, I believe that the Australian government is likely going to have to walk this back. Naturally, they've come out with a big stick, but Google's probably got a much bigger one and probably even a cricket bat to go with it. So this is going to be one of those issues that we're going to be having to pay attention to. Naturally, it's going to affect how potentially, if they do walk away, how business is conducted in Australia and obviously the broader economy. It means all the advertising and everything else that comes with it is likely to impact small and medium enterprises. It'll increase their costs of goods, and therefore we'll end up seeing a few other problems along the way. Now, moving on from that, silver has had a little bit of a silver lining today. We've seen it crack the $30 mark in the overnight session. Now, there has been some speculation about whether Redditors are involved or not on this. And so far, it's kind of difficult to summarize whether it is or isn't. Now, we know that the other day, the Redditors were talking about going on the iShares Silver Trust, but they've since decided against it because one of the people that they consider to be the boogeyman, if you will not be allowed, or they don't want to make them money because they have long positions in silver. So they have seemed to have changed their tune, but you are obviously still seeing lots of media attention, particularly through Twitter, about silver and going long. Now, in this instance, I'm on the climb. I wouldn't be wanting to short silver because it is actually a valuable resource. It's not something that I anticipate as going down dramatically. Right now, it's resting at about $28 per ounce. But within reasonable range of what its original targets were and where it has been before. So realistically, I think silver is still a good place to be holding some value or a store of value at this point. Whether it continues to rise is going to be questionable because of obviously we don't get the same sort of frenzy that we've had on GME and the other ones, then it's not going to be the long option. But neither should it be the short option in this instance. So right now I'm a little bit tentative about where it goes next, and I'm really going to be relying on some of the other matters that might help with it. Now, I'm looking ahead at earnings season. It's not often, as a media host who is in finance, do I get to talk about Ferrari and cars and all those cool things that we used to love as a kid, but in this instance, I do. Now, Ferrari is going to be releasing their earnings results at some stage this week. In fact, it's probably a little bit later today, before the bell of New York. So keep an eye on that if you are going to have a quick look at it. The ticker code is RACE, which is very cool as well. Now, in this instance, when we look at what's gone on with Ferrari, over the last sort of 2 years, they have had a CEO that has been quite conservative. The previous CEO before the one that's currently enacting has decided to step down in December. But even then, during his time there, he has done some wonderful things for Ferrari. So we have got a little bit of two sides to pick at, to have a look at right now. First side is Ferrari in 2019 actually sold 10,000 cars in that year. That's the most they've ever sold in a single year. Now in 2020, naturally, we did see them have better revenues and earnings results throughout the year, but in March they did have the tank, but they had the foresight, and the CEO had the foresight to shut down both of the factories for that period of time and preserve as much revenue. So whilst we have a 6.5% reduction in the amount of exports of vehicles that have gone out, we have had an increase of 6.8% on revenue. So that means that there has been some cost saving that has actually gone on. Now, looking forward to this year, why am I a little bit interested to see where it goes? Naturally, Ferrari is a race car. They sound good. It's a sound thing at the end of the day. If you get in the car and it's electric and it doesn't make any sound, you're not exactly as excited to drive it around the track anymore. So they've been working on this idea of hybrid motors, and that's all well and good. We like the idea of it. They're planning on having 60% of their sales to be hybrid engines by 2023. Now, regardless of that factor, at some stage, we are going to see combustion engines get thrown overboard and they will be unable to actually continue with that variation. They'll have to move entirely to electric. There'll be obviously more supplies of lithium or maybe less, depending on how much we mine it. But in either way, this is where it's kind of moving to. So they're coming into a very challenging landscape. As to how they're going to push through it is the next big question, because right now there's no real vision. The temporary CEO is just that. He is temporary until another adequate replacement is found. At the moment, they have 3 of their pickings that they're looking at, but again, we still don't know who it is, and we're not sure what their vision is likely to be like. So this does put a little bit of dampener on the long term for Ferrari. I do believe they'll still be able to pull through. I'm sure they'll be able to rise to the challenge because they're always at the forefront of innovation. But regardless, we need to keep an eye on how they're going to be able to compete in a market when you've got something like Tesla in the background as the looming giant behind you. So moving on from Tesla, we have got some other things coming out. Ferrari. We do have a couple of other things that are coming on for earnings season today. There's quite a few companies going out. These are the ones that I picked out that I think are worth having a look at. We're going to be having Alibaba, Amazon, Pfizer, Alphabet, ExxonMobil, FireEye, and Ferrari, obviously, all reporting today, either before or after the bell. So keep an eye on those if you are going to be trading those stocks. And most of them are available on the MT5 platform here at ACY Securities. Now, looking at the news ahead of today, outside of earnings seasons, which we've already spoken a little bit about, we're going to be having an RBA rate statement that has already been and gone at 2:30 p.m. this afternoon. We also have flash GDP figures are being released, New Zealand GDT price index, which is your global dairy trade index, very important for New Zealand as a measure of how many dairy products they are actually exporting and what the value of it is. We've also got economic optimism figures coming out of the US. From there, that's really about it for the night. It is got a few low impact events outside of that, things on CPI and on some other flash services as well. So keep an eye on some of the things that are going on tonight. Naturally, if you are trading the Aussie, make sure you have a look at the rate statement. From what I'm aware of so far, there's not been any major changes to it at this stage of the game. Now, moving ahead, if you do have any questions about today's video, you want to get in contact with me about anything, even one of my webinars, feel free to shoot me an email or a message on one of my social media platforms. And don't forget to like and subscribe this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.